All right, folks, my next guest asked, did the world end in the last 14 days and I didn't get the memo? All right, let's bring it out. Jim Bianco, Bianco Research. So, Jim, I know you were traveling a lot. Maybe you didn't get the memo, but it seems like a lot of things have changed in the last week or so.
Yeah, people think a lot of things have changed, and they have. I think if you look at what's been happening big picture, when markets go down, let's talk about that. It could be one of two reasons. There could be a reassessment of the fundamentals and the economics of the country or the company, if you're talking about a particular stock, or it could be about positioning, and it could be about leverage. And I think it's about the latter. It's about positioning and leverage. The yen carry trade, borrowing in Japan at zero interest rates, and using leverage to buy around the world is an enormous trade. And when the Japanese Bank of Japan, their central bank, surprisingly raised rates last Wednesday, the same day as our Fed meeting, it spooked a lot of those players to kind of get out of those trades. So I think it's a financial thing that's happened over the last couple of weeks. It's not an economic thing. So that's the good news. Now, the bad news is there's an old line on Wall Street, that economic expansions don't die of old age. They're murdered. And financial problems like this have the potential to murder an economy. Now, I don't think this one's going to get murdered by this, but I can't give you, a complete all clear at this point. It depends on if it gets a lot worse. So far, what I think we're seeing is an okay economy. We're seeing a financial problem within the plumbing of the financial system. But be careful, that can actually wind up impacting the economy.
Right, and because if you believe that markets are forward-looking, right, that the markets are harbingers, the way a market moves now doesn't reflect the current situation, but 6 months down the road or 12 months down the road. Couple that with the jobs miss, with the ISM data, some of the things you say that folks there's a lot of hyperventilation about. And if you consider that, we've had a lot of revisions, almost all of them to the downside. The data is getting worse and at a faster pace. Is some of this legitimate? Is some of this concern legitimate? And should people take defensive moves to protect themselves?
Yeah, I think that some of it is legitimate. I'm in the no landing camp. That's, Wall Street loves airplane metaphors. And all that means is I think that the economy's okay. And I worry that if we over worry about the economy and we start cutting interest rates too aggressively, we're going to overstimulate the economy and create more inflation. That's why I'm more worried about inflation than I am about growth. But nevertheless, you're right. There's been some mixed signals within the economy. The payroll report was weak. I saw you had Claudia Sam on a minute ago, and whether or not her rule is triggering a recession or not triggering a recession is a big open debate. So there are some cross currents within this economy. Now, I happen to remain optimistic on it. But I would say to anybody who's a little bit worried, yeah, if you're uncomfortable about it, you should be pulling back a little bit just to be safe. You have to make sure that you're comfortable more than anything else.
You posted a chart earlier this morning on the bonds, the Bloomberg U.S. bond government liquidity index, and it's spiking like, anytime we see these spikes, either we get real excited or real nervous. In this case, you mentioned that higher means worse liquidity. We don't know what's going to happen with liquidity coming out of Japan, although they tried to soothe nerves this morning. Has liquidity become too important with respect to financial markets? I felt like there might have been a time, and maybe it's myth-making, where markets moved on fundamentals instead of, how much liquidity there was.
Markets do move in fundamentals over the long term. So if you can have the time of a Warren Buffett, buy some stocks, check them in 5 years, they will move over the fundamentals. But over the short term, and the short term could be a month or two, they will move over technical things like positioning and liquidity. Now, what's happening, what that chart shows, is the liquidity in the bond market's getting worse. Now, part of that could be the carry trade unwind that we've been seeing. And so the concern is that the bond market is such an important part of the whole financial plumbing that when you have bad liquidity in the bond market, things tend to go bad in other places that you don't expect, and it can have very big knock-on effects. Now, that hasn't happened yet, but it is definitely a warning sign and a concern about the state of liquidity in the bond market.
Yeah, and that might also explain, we have yields up. I didn't see how the auction went today, the 10-year, but judging from the bond yield spiking and stocks falling, I got a feeling it was not necessarily great. We're going to check on that in the break. Jim, thanks a lot, my friend.
I'll tell you, it wasn't good.
It wasn't good.
It wasn't good at all.
Yeah, I thought that's what happened when the markets flipped as soon as the show started, or right before. Thanks a lot, my friend. Let's talk again real soon. All right, folks. Well, the election is hot.